Good afternoon, traders. It is the closing bell. It is 4 p.m. Eastern. My name is Anka Metcalf, and I will be talking to you about the technical blueprint for generating big profits trading futures indices in the first 2 hours of the New York trading session. And oh my goodness, what a finale for the market. We're going to be talking today's charts. For those of you that have not been trading futures before, you are in for a treat. I will do a little comparison on trading stocks and trading futures, and this is for day trading. I'm still a stock trading addict because I'm a very active swing trader. But what a finale, 1,300 points in the Dow, 137 points in the S&P, NASDAQ up 413 points, and Russell up 42 points. This is a tremendous rally that we had today. For those of you that are new, I want to welcome you. David and I put together this event, and this is actually the second yearly Women's in Trading and Investing event, and we're very happy with the outcome, and most likely we're going to work on building the third one for next year. So for those of you that are new, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. I'm a professional independent trader that is focused on futures trading just in the first 2 hours of the trading session from 9:30 to 11:30 and 12 o'clock max. And I swing trade stocks for a living. So I day trade futures and swing trade futures and equities. I have been doing this very successfully for the last 16 years. And prior to becoming a professional independent trader, I come from investment banking background. So I do have had a little help in my trading career to achieve my success as a trader sooner rather than a little later, or, I didn't have to struggle through my trading process as much as other traders did. I'm also the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities markets. We are also offering services that help traders on their path towards successful trading by trading with me personally every single day in the market. I'm also the designer of an institutional proprietary trading system that is based on the 7 layers of price support and resistance. And there is so much more than meets the odds when it comes to support resistance. And this is where you get your clarity, your conviction, and this is where you're getting your entry levels. This is where you're getting your target levels. And these are algo-rich areas. What this means is that you're going to have momentum institutional buy or sell on these specific levels. The reason I'm the designer is because I did not create them. I wish I can take credit for it, because I know in this industry there are a lot of educators that are taking credit for things that have been around for tens of years in the market. But no, I am not the I'm not the creator. I have just perfected it for my trading account size and for any retail trader, whether your account is small or whether your account medium or even big accounts. I also trade around specific time zones because I have been trading for more than 20 years. I could tell you that the market triggers at certain times and develops momentum at certain precise times into the market. And today I will share with you some of these times when we look at our charts and specific again, in today's trading session, these specific times played a major role because today the breakouts happened at these exact locations. Also, specific price zones. There are 4 specific price zones throughout charts. These are the best kept institutional secrets of obviously institutional traders, where price reacts. So this is where the price lines up, and if you have a confluence area, and if you have an overlap of this specific, of one of these 4 specific price zones, you're going to have a price velocity that can take the price higher or lower. So this literally overrides every little single thing that you have on the chart. Also, chart synchronicity, because indices are not all created equal, and under each index you have a plethora of stocks that are moving in sometimes in different directions depending on the market's activity. You're going to see an index that is stronger, and sometimes you're going to view an index that is actually weaker. So in today's trading session, we started with a bit of divergency, and that we're still having divergency right now in Russell, because Russell continues to be a bit on the weaker side. Today's advancement, and I'm looking at a live chart right now, it's 2.88% versus the Dow, which surpasses 5.20% up. So you can see that Russell is a little bit weaker. Russell was making new lows at the beginning of the trading session, while the rest of the indices were holding. So chart synchronicity and divergency is very important, because you need to pick an index that has relative strength and has the capability to run faster to targets. When I execute trades, I like to get my target immediately. So I don't like to sit in trades for too long. This is what day trading is all about. And also, I have a strict set of trading rules and a 10-point scoring system that enables myself and my traders to find trades with confidence and ease. If you want to get a hold of us, you could go to our website, TradeOutLoud.com. You can find out more about our company, our products, our services, and any detail. And if you have any questions, feel free to email me at info@TradeOutLoud.com. You could also find us with the TradeOutLoud handle on social media. So why do we learn, and literally why are we here all together? Well, because we want to trade our own money, right? And actually, there was a study that was done, and individuals, professional individuals that were trading their own funds had a much better return at the end of the year than institutional traders, right? And why is that? Because, and obviously, you know, if you brokers, etc. So we had a higher degree of accuracy, because we were trading our own funds. We didn't have to go through a broker, because the broker gets paid and he doesn't really care whether your position, you know, works out or it doesn't work out. He's paid by the trade, right? He gets his commission. Where your trade, you have to analyze, hyper-analyze. Am I getting in here? What is my rating? What is my confidence level? What is the trend, etc. So you analyze it every single bit of the time. So basically, why are we all here? First of all, financial independence. Second of all, you want to be control over your money in this market. You don't want and especially if you, you know, have a smaller account, you know, there are specific brokers where, you know, they don't manage smaller accounts. And I will show you, I will prove you with our trading results how you can grow even a small account. You want to be in control of your life, and you want to work from home. One of the reasons why I wanted so much to get into trading, and especially into day trading, is because it fit my lifestyle so much. I was spending more than 3 hours commuting, and I love my job. I worked in financial field. I worked with high net worth clients. I loved my job, and I really love what I'm doing. But what I didn't like is the long hours that I was putting in to meet someone else's objectives. And number 2, I didn't like the commute. And third of all, I was working in Detroit, Michigan, and in the winter time, which is literally like almost 6 months a year, you know, you have like treacherous driving conditions. And imagine spending 3 times in traffic at least every single day. So I needed a change. So I decided to take the step and quit my job and start my day trading and swing trading adventure. And it is something that I am truly grateful for, the step that I made, for the fact that I was brave enough to quit my job and start trading my own funds. It is not easy. And I could tell you right off the bat, it was especially in the first 6 months, were the most difficult 6 months of my life, because when I started out, everything was according to plan. And then I started, like everybody else, looking for that holy grail, thinking that there's an easier way out, thinking that, there's a magic indicator out there that is going to tell you where to buy, where to sell. So I had to go through all of that on my own again. And, what I've managed to make in the first 3 to 4 months, I gave up in the next 2. So then again, I had to reset everything, and I went back to exactly where I started. And I never looked at another thing again, because here's the thing, guys. If you have a system that works for you right now, do not change anything. Do not listen to anything. Do not change anything that you're doing. Do not add anything that you're doing. If you have a system that is working for you right now, trust me, do whatever it does. Okay, whatever you do, because if you try to change it, if it's working for you, whatever you're doing, if you're making money, again, do not change. Also, customize. What I love about trading is that you can customize your trading hours to fit your lifestyle. So what I do, I day trade futures in the morning, because I find that, when you wake up, your brain is so fresh, and then boom, you could get into trading. But this doesn't mean that you can, if you are not available to trade in the morning, that you cannot come back into the market in the afternoon trading session, or you can come. There are plenty of trading opportunities throughout the 24-hour almost cycle of futures trading. The other thing that I love about futures trading is that you have your hands-on, your 24 hours hands-on. If you're trading stocks, and trust me, I do trade a lot of stocks. And in fact, on Friday, I have a special presentation for you on stocks. And I know I haven't done one in a very long time, but I will show you the number of stocks that I have had in January and February. And I don't hold any stocks right now, but definitely for swing trades, but I will definitely share with you some trading ideas for the last month of the quarter. Also, with trading, once you build confidence, once you are completely educated into how trading works, it's extra income. That extra income can pay off your mortgage, can pay off your credit cards, can pay off the student loans. You could take vacations. You could spend more time with your family, more you time. And this was so important for me, because I was literally working almost 10 hours to 12 hours a day, and plus 3 hours of commute. So you can imagine, like, I didn't have a life. And what's most important, it is a recession-proof skill. This is the most important thing, okay? This is an industry where we profit in any market condition. Whether it is a bull market where the easy money is being made, and we know that since 2009, we had a pretty decent period of time until we hit some volatility that came in with the election, right? We had a little bit of volatility there, then we had in 2018, and then we had the volatility now. We had some volatility with Brexit, but it was not as bad as what we encountered this past week. But that is the easy money. So I've traded through a lot of bull cycles. I've traded through a lot of bearish cycles to know how money is being made in any kind of market condition. So the easy money is being made, obviously, in a bullish market where every pullback is buyable. And believe me, if I tell you, we are still in a very, very bullish market. So this is not a bearish market. This is just a scare. We don't know if this is going to develop into a bearish market. Now, remember, we have been running since 2009, and we're in 2020. And of course, recession. We profit also from a recession. I remember trading back in 2008. I was day trading stocks, and I was swing trading stocks as well. and swing trading futures. At the time, I was not into day trading futures at the time. This is something that I incorporated within the last 8 to 9 years because I wanted to simplify my life. And didn't want to go through the whole scanning selection because there was a lot of work when you're trading stocks. I didn't want to go through the, all the selection criteria of the stocks and et cetera, et cetera, et cetera. So there was one common denominator, and that was before you even look at a stock, what do you look at? You look at the market, right? You look at the market indices and see how they're positioned. Are they positioned for a rally or decline? Are they in an uptrend? Are they in a downtrend? You analyze the time frames, and you pretty much establish if you're in a strong market environment or a bearish market environment, and you go to your stocks and you have your selection criteria based on bullish and bearish stocks, because in a bullish market environment, you want to go with stocks that are overperforming because you want the momentum on your side. You want the velocity to take you higher, so you're not going to be in trade for 5 hours or 20 hours. You want to build up that momentum, and you want to get in right at that burst. So literally, I've traded that recession. I remember in 2008, I would wake up and say, oh, okay, what are we going to trade today? We were so bearish the whole 2008. We made a lot of money on shorting. And I remember the days where where I would come up in front of the computer and say, you know what, I'm not going to scan today. I'm just going to short the Lehman Brothers. And it worked fine until they went out of business. So we had, it was not a fun period for a lot of individuals back then, because coming from Detroit, I can tell you that one every other 3 houses in my neighborhood was in foreclosure. The 3 big car manufacturers are there. They were laying off a lot of people. It was a really sad time. There were tons of retailers that were going out of business. Do you remember Linen and Things? Do you remember Circuit City? So it was a really bad time for the economy. Things are different right now. Things are different in terms of valuation. So there are no devaluations right now. It's a totally different kind of feel to the market, and the internals are definitely different. But do you know how easy it is to slip into a recession? All you need is 2 consecutive quarters of decline in the real GDP, and poof, there you have it. Recession. So it's not that hard. And remember, this can be like a snowball effect. So it's not really fun. So protect you and your family. Learn how to trade. You can literally make a living from trading. So for a lot of traders, myself included, I made a lot of money in that recession in 2008, and once made a lot of money shorting. And when the market turned around in 2009, I had a plethora of stocks because they were dirt cheap, and that meant a lot of opportunities. So one of the stocks, just to give you a heads up on that, no, it was not Apple, although I had Apple. I had NVIDIA, and by the way, I had NVIDIA in my long-term account from $34. The reality is that you are finding opportunities in every kind of stock price point. But I find one of the opportunities that I was telling my members today in the trading room in a simple stock like Sirius Satellite, which was at 12 cents or so. And I remember I bought it, I think it was like 17 or 18 cents. And then I added more into 20 cents. Back in 2008, they didn't have a competition. So all the vehicles had to come equipped with some kind of, a satellite radio. And that was the only option. We didn't have a lot of other options in 2008. So for me, it was a no-brainer to invest. And the reality is, think about this. How much was I going to risk? What if the stock went under? I was basically risking 15 cents, right? So 15 cents on the share. So I position size, I allocated a whole position size for that, and I carried the stock until it was $6. So I made tremendous profit. Just think about it. It was a penny stock. And these are the opportunities that we need to stock right now into the market. So by the way, did you know how much money you need to retire? Well, investors feel that they need an average of $2.5 million in order to retire to maintain their lifestyle, according to a Legg Mason survey. Well, guess what? That's about 2.2 million more than the average balance of 385,000 those individuals actually have in their 401ks, IRAs, and similar accounts. We at TradeOutLoud teach and trade with a very structured approach. It's very easy. It is not complicated. There's not a lot of talk. We just look at the levels and we execute. We teach and trade live every single day, a highly successful algorithmic level that enables us to profit from high momentum moves at specific times and specific price patterns and specific locations. Our method overrides any kind of news event, any artificial indicator, earnings, dark pools, you name it, it overrides everything. I have been doing this professionally, don't forget, for 20 years, for over 20 years. So let's talk a little bit about futures and futures requirements and how you can get started if you're interested in futures. And I promise you that by the end of this presentation, you're going to seek more information on futures trading to see how profitable this is. Well, first off, let's start with this minimum account, right? So how much money do you need to trade futures, to start trading futures? Well, one of the reasons many traders gravitate towards futures trading is the relatively low startup cost, right? So for example, usually requires about $30,000 to open a stock day trading account, and you must maintain at least $25,000 to keep your day trading status, because if you lose a penny or a dollar, your trading status is out the door. You're not going to be able to day trade stocks. The futures market, on the other hand, allows you to open an account for as little as $5,000, and this is for full-size contracts, or $500 minimum, but I don't recommend you really trade with $500, but can you open an account and trade micros? Yes, you can. And best of all, you do not have to maintain that amount, because as long as you have sufficient cash in your account to cover the margin requirements to trade the commodity or the micro, right, or the index, you could actually have a balance of $700 to $800. And best of all, you can still trade futures. The other thing is that you can take advantage of the full-size contracts or the micros contracts. A lot of traders in my trading room, because we had an increase in volatility, even though they have medium accounts, they have gravitated towards micros because you can position size better. Example for today, and I have some charts for you. Some of the setups that we're developing today were insane. We had risk levels in the mini S&P of 50 points, okay, 50 points. We had levels in YM of over 300 points. We had over risk in NASDAQ for 100 points. And what this tells you is that the patterns may be there. However, the difference between the entry and the stop, that risk that represents the risk, is very elevated. So you have to weigh in. Is this a trade that I want to take, or is this a trade that I do not want to take? Remember that most of the time, traders lose and blow up their accounts because they see the pattern, they identify the pattern, but what volatility does, it zooms out the difference between the entry and the stop, and they are not aware, they do not know how to calculate. They see the pattern, they get in, and all of a sudden, all you need is that little volatility spike or a tail to take them out with at least 50 to 60 points in the mini S&P, and that's where you get your margin calls if you have a very small account. So you can trade future indices, mini micros futures indices, which are fantastic. They're better than paper trading. They are great for scaling in, great for volatility use, and great for swing trading. These are some results that we have here, and this is the mini micro Russell. Take a look at the size, and this was actually a swing right here. Take a look at the size, one contract, $530. Okay, and we have more examples as we go through this presentation. So basically what I trade, basically my sweet spot in trading futures is from 9:30 a.m. till about 11:30 to 12 o'clock. This is where we're getting the overlap of the London session with the New York trading session. And this is more volume, more volatility, and this has the force to push the price into targets fast, and then we're done. I don't like to sit in front of the computer my whole entire day. For my swing trades that I carry on, I set alerts and I can travel anywhere. I have my phone with me. I have my iPad if I'm going somewhere, if I'm, trading somewhere, etc. If I'm visiting and if I want to get a handle on charts, etc., etc. But the reality is that if you want to day trade futures and focus on these first 2 hours, if you are retired or stay at home, or if you're looking for another career, this is the perfect thing to start trading. Can you trade outside of the zone? It's fine. It's perfect. And you could actually, I have actually 3 traders that are working full time. They have executive jobs and swing trade futures, and they love it. They love it. We teach traders how to day trade and swing trade, and how to take advantage of chart price action even from the Asian session. So geopolitical events do not wait for the markets to open. And you guys saw that we had a gap down in today's trading session, right? When we opened at 6 o'clock, we automatically saw the Dow plummet for about 600 or 700 points, and then it rotated and went back up, right? So imagine the scare if you were, let's say, long from Friday's the SPYs, and you saw that in the overnight trading session. You have no control over it. But if you see that happen in the overnight trading session, if you're trading futures, you're hands on because the market is open for you. So the futures market is open 24 hours a day, almost 24 hours a day. It resets between 4:15 and 6 p.m. So the next trading session starts at 6 p.m., but it's open 6 days a week. It opens on Sunday at 6 p.m. Eastern and closes on Friday at 5 p.m. So the futures traders have the upper hand because they can react as events unfold. Where the stock market, it opens at 9:30 a.m. and closes at 4 p.m. 5 days a week. So stocks trade, and with stocks, you have to wait until the market opens to place a trade. Now, newsflash, this is an election year, okay? So we're gonna have a lot of volatility as we're going into, especially into October. October is known as being one of the most volatile months, and it's not very pleasant to trade. Actually, usually September and October are the very difficult months to trade. And then as we're getting November, December are way better, actually the best months to trade. There was one exception throughout, I would say my trading career, when we had the steep volatility and it was totally not so typical trading environment. That was in 2018, where we had again that volatility strike. So why I day trade futures? Well, first off, I day trade because I only like to be in front of a computer for about 2 hours a day, because the concentration is so high at this level when you're looking for these specific price zones, because you literally cannot make it. The human brain is made to go on a commercial break every 15 minutes. So every 15 minutes, the human brain, boom, needs a little commercial break. Just observe yourself. So, take a look, and even if you're listening to me right now, don't tell me that you don't feel the urge right now to, to pick up your phone and take a look at, what's going on Twitter, on Facebook, what our friends do. Are you getting any text messages? Are you getting any emails? Because your brain cannot function. Nobody's brain can, not mine, not yours, nobody's. So therefore, if you concentrate for a longer period of time, you start losing interest. A lot of times, a lot of traders lose money because they force trades. Why? Because they sit in front of the market. They know the concept that you need to wait for a setup, but they don't have the patience to wait for the setup. And they say, oh, I'm just going to get it here. Okay. And that's when the big mistakes are happening. So I trade for 2 hours, but the reality is that I prepare 2 hours in advance. I prepare for my students when I go into the trading room. So I have everything all set. So when we start the trading session, we're ready to roll. Most of January and February, we had all the trades all pre-mapped up. At 9 o'clock in the morning, all we had to do was put in the limit orders. And when I came live on the mic, all we did was trailing. And we were basically done in 30 minutes or less. So it doesn't mean that you're literally sitting in front of the computer for 2 hours, but you're in a really nice trending market environment. You're going to have really nice follow through, and you can be done, like I said, in 30 minutes or less. I profit from the most volatile part of the day. I trade only very high odds trades. So a trade that I take has to have at least 75% or more odds for a fast move to the targets, because I want to get fast out in high momentum. And this high momentum that I'm getting, I'm not going in for one tick. I'm not going in for 3 ticks. I'm going for big full points. I'm going to show you my portfolio. If you're interested, however, in our portfolio, since we initiated the trading room in 2017, you could go to our website. And if you click on the trading room tab, you're going to have a little drop down, and just click on performance portfolio, click on that, and we have the full results with all the trades, all the entries, the stops, the targets, etc. You can reload them on your map, and you could guide, you could use that as to back test what we have been doing. So this is my income producing style of trading, and this is why I like, this is where I'm paying all my bills from, because every month I reset my account to the initial size. So I don't know, first is if you have a trading account, which is very common for day trading futures, around $25,000, let's say you're generating another $7,000 to $5,000 income on that. At the end of the month, you pull your money out, you reset it back to 25,000. This is an income producing style of trading. I also swing trade and invest in the futures and the stock market. And this is a method that unchains me from the computer, because I don't have to watch every single tick, but I go with higher momentum on charts. I apply the same methodology, but on higher time frames, and I adapt to higher time frames, which gives me 2 or more days or weeks for the trade to progress, for swing trading, and for investing for months and even years. So I promised you guys, I have a new webinar for you coming on Friday that will reveal my 2020 trades and strategies for swing trading and active investing. So here are some of the advantages of trading futures. For those of you that have not been trading futures ever before, and just type here in the room, I want to know how many of you are not trading futures and have not had an interest of trading futures until now. Just type a 1 in the room. Just want to know what the pulse is here. Okay, so here are the advantages. Number 1, you could take on a short position with ease. You have reliable volume data. You can trade major markets. You're trading the Dow, you're trading the S&P, you're trading NASDAQ. The other thing that I like is that you can trade earnings via futures indices. So this is really great. Why? Well, because think about when Apple and Google and Microsoft and Amazon are coming out with earnings. What do you think happens? They're going to push one of the index. So if Google is going to have earnings, NASDAQ is going to have a reaction, and you can plot this at the end of the trading session, and you can take advantage of that, because remember that the futures market closes at 4:15, and then it reopens at it closes at 4:15, and then it reopens at 4:30, then it runs into 5 o'clock, and then it closes again. So you could take advantage of that pre-market, let's say pre-next session move. It's still within this, it's still within the day trading session, but you could take advantage of that. We've done that numerous times. All right, so there are a lot of advantages here. Also, income and wealth. Day trading is an income producing style of trading, and swing trading is wealth generating. Because you're locking in that portion of money, right, for a week or 2 or even 3 or even 4 weeks, right? So you can't pull it out of the market every week, or or every day. Take values and price ranges. This is amazing, because last year in May, the CME came out with the micro futures. This is incredible for volatility. And in fact, this is the first time we could take advantage of the micro futures in this volatile market environment. E-minis and micros are available right now, and they're fantastic, not only for futures indices, but you could trade gold, you could trade oil. For instance, today, I had pointed out a trade in oil. The trade in oil was actually had a dollar move. I called the trade long at 46.30 with targets at 47 and 47.30, and it ran for $1. So these are the kind of market market velocity moves that we're looking for in the market. I don't wake up in the morning. If someone would tell me, come into my trading room and I'm going to teach you how to make 1 tick or 2 points in the mini S&P, I would go back to bed. Okay, why would I get up for 2 ticks? So we're going for the big bucks here, and you can make that big bucks as well. You don't need a scanner. The other thing is that if you're a stock trader, I often use a scanner because I'm a momentum trader. It was easy because I could find the gaps, etc., what I was interested in. So that's an extra cost. I love my scanner. I use Trade Ideas all the time. I just absolutely love it, and I still use it for my trading. You don't need any special indicators. In fact, a lot of we're on the same page. I think all of the presenters today emphasize the fact that you do not need a special indicator. Don't buy into those really shiny indicators that really are not going to do anything for you. You're usually going to spend a lot of time learning how to work with them. You're going to spend a lot of money on a subscription or just paying for that simple indicator. And guess what? When they decide to pull it out of the market in a year or two, you're going to be like blindsided because you're not going to have that shiny indicator that's going to tell you whether that candle is blue and that means buy, and it's like whole different things. Okay, there's the tax advantages, 60-40 rule here in the US. UK, you guys that are from the UK, you even have a sweeter deal there. There's no pump and dump. It's safe from rumors, no manipulation, no downgrades, no upgrades. And guess what? It's a 24-hour trading environment. So you are literally hands-on. So you're not going to miss a beat. What I trade the futures indices, and this is something that I specialize in. And trust me, guys, it's so hard to miss a trade when all you're doing, you're watching 4 indices. And the reality is that after the morning analysis, all the pre-market game plan and all the pre-planning that I do, we're literally zooming in on only 2 or 3 indices at the most. So we're trading the mini Dow, the mini S&P, mini NASDAQ, and Russell. I do not trade the VIX through futures, but I do trade oil and gold a little bit more actively than I trade anything else. There are huge opportunities in bonds. We have traded bonds as well last week and the prior week. If you're a swing trader, there are seasonal opportunities in corn and wheat and rough rice and soybean meal, etc., and even in currencies. I want to talk a little bit about the advantage of buying power because this is tremendous. If a trader wants to, let's say, to day trade the Qs that are priced right now at $212, the trader needs about $12,000 in buying power to buy 100 shares. That's it, guys, 100 shares. And if the price goes up 50 cents, you're going to make $50. Now, each cent is $1 for those of you that are not familiar with stocks. But if a trader wants to buy the E-mini NASDAQ, which let's say right now it's priced at 86.91. It was priced earlier today at 86.91. Now it's trading at 88.14. The trader needs about $8,200 to buy 1 contract. So here's the difference: $12,000 to buy 100 shares of the Qs, or $8,200 to buy 1 contract. And here's the nice part: if the price goes up 50 points, not like today, it went 363 points today. So if the price goes, this is not your normal market environment, so I could rest assured. But if the price goes up 50 points, which we had, you could profit about $1,000. So this is a huge comparison because each point in NASDAQ is about $20. So here's the comparison. Would you rather trade the Qs? And for a 50-cent move, would you rather make $50 with a $12,000 buying power, putting $12,000 at risk, or would you rather trade NASDAQ? And actually, from that 50-point move, you make $1,000 bucks. Let me share with you how it works on the chart. And this is a chart that that I put up. I think it's from December 12 or something like that. So it's like 2 weeks ago. All right. So I did this for some of my traders, and I showed them 2 trades simultaneously, the Qs and the SPYs. There is a mini, David. There is a mini in oil. The mini in oil, I think it's QG or something like QM or QG. I don't trade it. I trade the CL. But there is one which is half the size. So when you're having, let's say, an really incredible risk because of volatility, and when you have, I don't know, let's say $1 risk, you could use that mini and you could have half the risk. So instead of using $1,000 per contract risk, you could use $500 per contract risk. So here's the example with the Qs, okay? So let's say you have the Qs trading with the same technical pattern. The buy is 233.10 right here, 233.10, applying our high velocity momentum move. And we bought it with 100 shares. Notice that we used $11,700 in buying power. The trade was entered at 11 o'clock Eastern. The trade duration was 40 minutes into target because it was a slower day. So it took about 40 minutes into target, which for us as day traders is an eternity because I usually love boom, really, really fast to get out of trades. Anyways, we stayed in the trade for 40 minutes. The buying power was like this. We bought this with 100 shares. And guess what? The profit is $101. Ta-da. Let's take a look. It sounds surprising because this is a different chart. But look at the resemblance, right? Same moving averages, same chart pattern. So if you're a stock trader and want to make the move to futures trader, there's not much difference, but a lot to gain. So this is still a 40-minute trade. You can see it right here. The buying power is $8,200. One contract where 1 point is 20 bucks. Notice the difference. So same trade duration, 40 minutes on both trades. So notice that the price, look at the pattern right here. So the pattern is absolutely identical to the Q, $790 trading NASDAQ and $100 trading Qs. Okay, so this is the difference. Let me share with you today's trades. Okay, so today in the trading room, we've noticed increased volatility. We did not take a trade. I did not take a trade. I want to highlight this. But we have identified, and we talked about it all day today. We waited, and then boom, we identified the potential momentum move, which happened. And we identified this medium odds trade at 10:30 a.m., which is one of the trigger times, prime time trigger times in the market. 65% odds of success. It did not meet our criteria for 75%. 75% or more because of the elevated risk. It had a risk level right here that you see, 50-point risk. And that is one of the reasons why we didn't take the trade. Did the trade work? Of course. That's why it has 65% odds of success because it was built on momentum. The trade triggered at 10:45 a.m. The trade hit all the targets. I'm pretty sure that here in the trading, I have some of my traders that were in the trading room today and can attest for that. We hit all our 1, 2, 3 targets. Take a look at the targets, guys. Potential profit of 50 points. It hit all targets, $2,500 per contract. We did not take it because it had a 1R risk to reward ratio trade. What that means is a disaster. You do not take trades that have 1R risk to reward ratio. These are like literally prone to disaster because these are going to blow your account. We identified the next trade into the mini Dow. You can see that we have the entry at 25,730, elevated risk at the time. And did it hit all targets? Yes. But we're not just taking the trade just because we see it run into targets and we see the trigger that is very close. No, we evaluate the risk because what happens if the trade turns around? How much were we risking in this trade? Where actually this trade had a risk of about 160 points. And that's one of the reasons why we did not take the trade because guess what? In the market, nothing is guaranteed. Did it hit all targets? Take a look at the targets, guys. One of our last targets was 26,050 and it traded above 26,200. Okay, so this is our method of trading. Also, another trade we identified in NASDAQ. NASDAQ was actually one of my favorite trades. Potential reward for this trade was about 103 points to the upside. You can see it right now. It's 370 points to the upside, and it hit all targets again. One of our last targets was 8,700. You can see the momentum moves that we are literally stalking into. And basically this trade happened super fast, happened in about an hour. Also, these are some trades from the trades that we took, and these are some of the notations that we have on our charts. I'm going to show you some other notations that we have that we share with our students when we trade live and in our classes. So we teach traders how to initiate the first entries, how to initiate the second entries, and where to place the stops, because this is a big, big deal, guys. Just run away from any kind of service that does not provide the following. And we're going to talk about that. One, the risk level, how much each how much is the moderator risking per trade. If that moderator is not providing you this key piece of information, you cannot take the trade. You cannot literally evaluate how much position you are going to take for the trade. Here's another trade. These are 5 contracts. These are from my personal results from my portfolio. However, keep in mind that I am trading a relatively low size. Notice here, 2 contracts. I only have 2 contracts here, and look at the results. I don't trade 10, 20, 50 contracts. These are 5 contracts right here. These are 6 contracts again here. So literally with very small size, but precise moves. So how much money have you made this year from trading? Okay, let me share with you our results. We are literally the January results, trading with 1 contract per trade. This is $6,225. 1 contract per trade. Okay, this is literally, guys, 1 contract per trade. In the month of January, we have 36 winning trades. We have 8 losing trades. Total trades 44. Take a look at the performance right here. We have everything mentioned: the entry, the stop, target 1, target 2, and trailing, right? So our win ratio is 81.8%. This is why we're taking trades that have an odds of that have really high odds of succeeding and achieving targets. For February, we just closed February. It was a phenomenal, massive month for us. Take a look at our trades right here. With only 1 contract per trade, realized $10,000. You have that $25,000 account. Guess what? Our students are richer with $10,000 in the month of February. Trades executed 26. How many trading days were in February? Not many, but you can see that we don't trade every single day. So if you see a date that is missing here, it's not because we didn't put it there. It's because we did not take a trade. Like today, first day in March of trading, we did not take a trade. The win ratio for this month, we have 26 winning trades, 4 losing trades, 30 trades in total, 86.67%. This is all transparent. So what other indicators do not provide that we do? The risk levels. And traders blow up their accounts because they think trading is as easy as buy here or sell there. And then the other thing is management. We have a system where we teach you and we do it for you, at least in the first month where you are trading with us. We guide you through the process. We teach you how to manage your trades so you can keep the trades into targets. And then we teach you how to position size. This is the most important thing because this is what makes or breaks your trading account. All right, here are some charts that I want to show you. This is bullish above, that you can see it right here. This is the breakout point. This is our buy zone right here. So you can see that we trigger right here, and then we waited, we went for a setback, and then we finally took off right here. Remember, in volatile market conditions, the stops are zoomed out. So what that means that if you have a smaller trading account size or medium account size, by all means, why don't you use micros? Don't think that if you have a ginormous risk amount, you're not going to trade. I mean, not on a day like today, but oftentimes when you have a considerable, a 10-point, let's say, stop in the mini S&P, use micros. If you're using another stop than what is dictated by the chart, you're definitely going to blow up your account because you need to respect what the market is providing you. So these are the type of trades that we take in the trading room. S&P long 3071. These are targets. All targets hit 11 points, 500 per contract. Trail stop, break even, yada yada yada. see along parameters, et cetera, you could see the details right here. This is also another detail on how we provide our trades and also the reviews. All targets hit, 2 targets hit, 3 targets hit, no trade was very extended at the open, et cetera, et cetera. So you get the idea. This is also, these are just to show you some of the examples of how accurate our method is and how transparent. And by the way, all these trades usually get, not in a day like today because we needed to see the open and the trades came a little later into 10 o'clock. They started to form into 10:30 to 10:45. But usually we have everything all sorted out if the market provides us with all the information and everything is ready at 9 o'clock. All we need to do is hop on, put our limit orders, and we're done. So you guys have probably heard the headline that coronavirus wiped 1.7 trillion in US stock market value in 2 days. But those 1.7 trillion are in someone's account. Somebody profited from that volatility. There is always someone on the other side of the trade. Volatility is what pushes the price faster to targets, and it can work in both directions. It can work for you or against you. And this is the #1 opportunity for the astute trader. A lot of times, traders that are not educated enough do not see the risk potential in volatile markets. They get in, and then the price very quickly moves in the other direction. And guess what happens? They do not have the time to put a stop. And that's why you get the margin call, okay? So we at TradeOutLoud have traded the 2008 and 2009 market crash. We traded through the QE years, election years, Brexit, China trade wars, and the 2018 volatility. So 2020, bring it. We are literally so ready. So I was telling you earlier, this is actually my watch screen, and this is how I watch it. So it's really hard to lose focus when you're only trading the 4 indices. And when you have these notations, my traders know exactly what they need to do at every single step of the time. And we teach in class how you can determine these levels that are so easy to calculate. Also, time frames, trading is about adjusting to time frames. And again, today, like in this day where I posted this chart, the velocity of the move came from the 4-hour charts. So that doesn't necessarily mean that you're going to be trading the 4-hour charts, but that means that this is where the price is dictating the next move. What I focus on, this is actually my trading plan all in one slide. I focus on the market open. I look at the price calibration and velocity. I look into the 10 o'clock reversal time, how steep or how shallow that 10 o'clock reaction is. And at 10:30 or around 10:30, this is my last chance to take a trade. I typically take trades between 9:30, 9:35, and 9:45. And as you can see here, these are my execution times: 9:35, 9:45, 10 o'clock, or 10:30. Anything that expands beyond 10:30, I have no interest in, and I'm done for the day. I'm waiting for the next day to see what that brings. And obviously, I'm measuring the setups, determining the ESTRP, and that is the entry, the stop, the target, the risk, and the position sizing. I trade 2 simple patterns. I teach 10. However, there are 2 simple patterns, and especially in volatile markets, there is the pullback buy and the pullback sell, and of course, breakout and breakdowns of third catalyst levels. I trade the 2-minute chart, 5-minute, 15-minute, 30-minute, 1 hour, and 4 hour. There is no secret formula and no secret sauce on what time frame to trade. It depends on where the price is lining up for the next momentum move. So you have to analyze everything. How do you prep for all this? Well, first off, you have to check your economic releases for the day. Check off coronavirus stats, because this is where we are. It's not even funny. Check out your earnings for the day, and check out and compile your pre-market game plan, right? So when you're doing your pre-market game plan, you have to zoom out to the highest time frame and zoom in to your closest time frame to where you're getting your trigger prices and where you're getting your exact chart explanation. And literally the chart is going to tell you whether that is a buy or a sell or a sit on hand situation. And then you have to zoom in on your technical execution chart, right? Technical execution charts are usually smaller time frames from 1 minute all the way into the 15 minutes, sometimes to the 30-minute with some confirmations. You have to determine your support, resistance, and confluence areas. You have to determine your key locations according to those precise timings and those four precise price locations. It's all about price cluster, and then determine relative strength or weakness in the indices, right? To see who is your next, where is your next trade? Is it going to be the S&P? Are financials making a move? If financials and oil is making a move, then yes, I will choose the mini S&P as my go-to. If techs are strong, if semis are strong, right, I'm going to go to NASDAQ. If I'm having industrial strong, if I'm having Boeing is going to have, Boeing is a huge component of Dow. And if Boeing is going to have a very strong day, then obviously I'm going to go towards the Dow. And also, if trading at all-time highs, right, we had situations throughout January and February when we kept on hitting all-time highs. Remember, know how to use FIB projection because you have to have a measured move. Institutional traders trade with measured moves, so you need to know where those projected targets are. This is from today. And this is in the afternoon. I had a coaching session while this session was going on with one of my traders, and we were mentioning this breakout level in the mini S&P 3036.75, and I told him that we're gonna have targets into 3058 and 3088, and the last target into 3100. Guess where it went, guys? Guess where it went? Guess where the price went? The high today is 3093.25. We had a last target is 3100, but we had actually a target to in 3088.25 right here. So if you're looking at a chart right now, this is our method that overrides anything. You don't have to look at anything. You don't have to have that magic special indicator. You don't have to look at any charts. You don't have to look at anything but price action. Price action is key, and that's pretty much it. Time frames. What time frames I'm using? Well, I'm using, like I said, 1 2 5 15, and this is my income producing zip code, and my wealth generator zip code is 1 hour, 4 hour, daily, weekly, monthly, and quarterly. Also, someone was asking me here, and I get questions all the time, how about micro gold? There's micro gold, and micro gold has been around forever. A lot of traders don't take advantage of it. Why don't you guys take advantage of the monster moves in gold with micros? I mean, take a look at these results right here. $600, almost $700 trading micro gold. Micro gold right here at $1,300. I don't trade it, but for example purpose, I just traded 1 to 2 contracts just to show in my presentations how much money you can make. I trade the regular size. Or mini Dow. Take a look at a mini Dow. You want to make, you know, you have a smaller account, you have $1,000 or $2,000 or $5,000 account. This is what you should be trading. Take a look, guys. I mean, this is so doable, right? This is so doable because guess what? Have realistic expectations when you're trading a $5,000 account. This is huge. You have, if you're trading the mini Dow and mini S&P, that's a $500 win on the day. Guess what? That is 10% on your $5,000 account. 10%. What does the bank give you? What are the bank's interest rates? Okay. All right. So the S&P, take a look at here. We had some monster swings. So like I said, we do swing trades as well. Last year, we had a plethora of swing trades. It was one of my best periods in a very long time. October, November, and December was just phenomenal. Also on NASDAQ, you can see them. These are from my own personal account. Risk to reward ratio, definitely, guys, you need to evaluate the risk to reward. If you don't evaluate the risk to reward level, you're not going to have a successful trade, because the risk is the amount a trader is willing to lose on a trade. So you have to be very comfortable with losing that risk amount. So I can't emphasize enough risk to reward, risk level, and also position sizing. More are the most important things. So try to, if you're having a tight stop of about 2 points, look at least for a 3 or more risk to reward levels. Okay. We have just wrapped up a class, guys, that we had the Power Income Futures Trading course last week. We wrapped up the course. It was a very successful course. My traders were able to be in the trading room a week before they actually started their subscription with me to trade live. And one of the traders already made his money, his course money last week. And I'm not kidding you guys when I'm telling you. I send out some emails. I am not kidding you with the trades that we had last week. We teach you the most powerful day trading chart patterns and how to exploit them for above average gains. We teach the 6 major disciplines for every trade: the entry, the stop, the target, the trade management, position sizing, and trailing. It is, by the way, it is a 5-day live class. You're not buying a book. You're not listening to a recording. If you have a question, you can ask me right on the spot. Plus, throughout your trading career, you have unlimited access to me. If you have a question about a setup, a trade, a position that you're holding, you can pick up the phone and call me. You have open access towards me. We teach you the market tempo, when to act, how to maximize your timing using key moving averages and other powerful indicators, how to maximize gains, precise locations, where to buy and where to sell, and advanced technical analysis, and so much more. And with this class, you get the on-demand recording, you get the e-manual, you get the platform layout, risk chart, unlimited retakes. So if you're interested, oops, sorry. Oh, here we go. All right. So if you're interested in the next class, we already have a lot of requests for the next class. We don't take a lot of students because I work one-on-one with them, and I work one-on-one with you guys. The next class is March 30th through April 3rd, and you're going to be trading with me live for 30 days. But guess what? If you sign up, if you decide to sign up throughout this week, the sooner you sign up, you're going to have access to the trading room. Okay, so sounds fair. That's a $300 savings right there. So the class tuition is $49.95, and if you're interested, you can sign up at TradeOutLoud.com/futures, and we also have installments available. And guess what? For this week only, we are waiving out the installment fee, which is $500, and you're only going to pay $49.95. So if you have any questions, feel free to email us at info@TradeOutLoud.com. We're happy to provide you with more information. So thank you so much, guys, for sticking around.